So since the pandemic started and maybe is now winding down, the US government has spent trillions of dollars in stimulus trying to keep the economy going, make sure that we have an economy that doesn't collapse. And so far, according to the US government, they've spent 3.7 trillion in total outlays. There's a little bit of money that has gone to obligations, meaning that they're promises of payment that are made that hasn't been spent yet. But so far, 3.7 trillion represents all outlays or actual payments made by agencies for pandemic. This is through 4/30/2022. And again, there's another, 6 or 700 billion that is promised. But so far, 3.7 trillion has been spent. Has it all been for naught? Is it all wasted? Well, I don't know. According to CBS, the stock market has wiped out $3 trillion in retirement savings. So all that stimulus money went out to the economy, but in the same period of time, about the same amount, $3 trillion, has been erased from the economy, from the stock market crashing. Was it a break even? Was it an even wash? That all that money, was it spent for nothing? Some people think that the stock market is going down because of the stimulus spending, because of inflation. People can't afford houses, can't afford gas, can't afford groceries, so they're not buying as much. What do you think? Put your comments below. Do you think that there's a relationship between these two? Is it a coincidence that these numbers are about the same? Do you think the stock market is going to go down another 700 billion to match? Or do you think it's just a pure coincidence between the two? And if that is the case, that 3 trillion that people counted on for retirement, how's that going to be replaced? Are these people not going to be able to retire? Are they going to have to work longer? Are they going to have to take out loans, pull money from other areas? And begs the bigger question, should we spend more? If this 3.7 is already spent, should we be spending more on other programs? Maybe student loans, maybe other social programs. What about interest rates? The Fed has raised interest rates 75 basis points in the last week, and supposedly more on the way. We've talked in prior videos, we expect that mortgage interest rates right now are approaching 7, will likely be 10%. When we did our prediction on 10% mortgages a couple months ago, people thought we were crazy. Rates were at 2 point something percent last year, the end of last year. Seeing them at 10 seems like it's impossible, but now that they're almost 7, it doesn't seem like a stretch anymore to have mortgage rates at 10%. So what do you think about all this with the economy? Did that stock market fall cost you money? Is your retirement at risk? Is your 401k lower than it was? If it is, what would be your plans? If it stayed low, and let's say you had a 401k that had, I don't know, 500,000 or 600,000 in it, and now it's got 220,000 in it because of the stock market crash, what do you plan to do? You had planned a retirement based on having that 400,000 or 500,000, and now if it's 2 or 250, are you changing your plans? How are you going to make up for it? Are you going to try to do something more risky to try to make up the difference? Are you going to try to put more money into it? Are you going to sell some items? What are your plans? Let's hear from you in the comments, and we'll see you on the next video.